Welcome back, everyone. This is the London session on TopstepTV. My name is Deeyana Angelo. If you stumbled across this live stream for the first time by accident, I've been trading for 17 years, and 12 years out of that, I've been trading futures, mainly specializing in crude oil and precious metals. Now, I've been looking at this stuff today just to see where we might be able to find the best opportunity. Gold actually looks very interesting for some sort of a pullback. But again, doing pullbacks at all-time highs might not be the best choice. So I want to find a backup for that. Copper is moving this morning quite a bit. We're arriving to the area that I would deem sort of like a line in the sand. Full screen, yes, of course. There you go, Bruno. Thank you. So this value area low from yesterday's London trading just above these levels. And to me, I want to see whether they reverse from that or whether they accept value. That's why I'm saying it's a line in the sand. This is the sort of analysis that I go through every single day. Now, last night, I posted these stats from this particular coffee account. And then, I got a whole bunch of Twitter trolls that are, they do what they do. They're keyboard warriors, probably not very successful in their own life, so they need to find, an outlet to bash other people and exert their negativity to others. Now, we try not to do that here. Obviously, we want to keep it positive. I did say, this is not 22 trades. This was usually about 3, 4, 5 trades on micros, scaled in and out. But because of the way the Topstep reads scale ins and scale outs, it will literally say that every time you scale in, that's another trade. Every time you scale out, that's another trade. So obviously, if you're trading micros, I will be trading like, 3, 5, 7, 10 micros, and then you would scale out or scale in depending on how the opportunity is actually looking. So don't freak out. It is not 22 trades. It is usually 3 to 4, maybe 5. On most days, I will do about 5 trades in this XFA. And that's on different products. So that's not one product where I'm just clicking buttons for 5 trades. It's basically 1 or 2 trades on platinum, maybe 1 trade on crude oil, maybe another on gold or copper, okay? So do keep in mind that I trade multiple things and that whenever I'm trading micros, typically I will scale in and out quite a few times in the run up to my target. Sometimes I will even adjust the average. So let's say that you have an idea. Let's talk this through. Let's say you have an idea about copper potentially reversing at a particular area, or let's even maybe use gold as an example of that. So let's say. And I'm going to actually change to another XFA because I want to keep this one. Let's do this one. Okay. So MGC. So let's say you have an idea to short gold, but you're at all-time highs. So it's like it's a bit of a risky setup. So you're not going to full port like sort of 150 micros in there and then just go, ooh, it didn't work. I'm at my maximum loss limit. So you're going to start slow, right? This is what Mick from the risk team is always talking about. To, scale in if you're going to trade with larger size. If you don't know how to do that, to scale into 5, 10, 15 contracts, start on micros, right? So practice on micros where the risk is lower and you can actually control the downside to a much, much greater degree. So let's say that I have an idea that gold is going to fall, but, I don't want to put a huge dent in my account just because I think, I should be shorting gold at these levels because we have some core resistance areas that have already caused some reversals here. You can see up here at 2800s. So you would start with, let's say, a couple of micros, right? We're keeping the risk kind of similar. So let's try 40 ticks, maybe even a little bit bigger for that first one, because if it goes against you, you can actually scale into it, right? So you go, first lot of trades, first bunch of trades is in, right? So now, depending on what happens with this, if it goes into some profit, you can add another couple, but providing that it's not too far away from your reference area. If it's too far away, you're going to mess around your average too much, increase your risk, and then that's not really doing anything for you unless you get that huge momentum trade. Then you basically use momentum to account for poorer choice of a trade location, right? But that's a dangerous game to play. Now, I actually prefer to scale into trades, kind of like Dolby does. If it goes against me, I leave it enough room, so I would have a wider stop loss to begin with. And then as it kind of dips to my maximum adverse excursion number, I will add more. Sometimes if I'm in with let's say 5 micros and I want to add into 10 to get like an equivalent of 1 mini, I will actually figure out whether I want to be adding in. So this is what some companies call like DCA, but it's literally just scaling into a trade to obtain a better average. And you can't do that in like a sort of super scalpy way, because it always requires a zone to be larger and then to give yourself room to decide whether your idea is still valid or not, okay? But basically the idea is that I was kind of hoping that this was going to go against me a little bit so that we can see that. If it had gone against me immediately, I would have closed the trade, okay? And that would have been it, because that means that I either got the direction wrong or the timing or trade location or all of the above. Seeing how we do have some sellers stepping in, we do have some VWAP from overnight in here, so that could give a bit of a bounce. If not, then this is a pretty strong sort of sell, but it's risky. That's why, I'm showing you this on micros. If this went against me slower, so let's say I entered and right about now it starts to draw down a little bit. I have a point that is based on my own performance results. So that's called MAE number, maximum adverse excursion number, that tells me the sort of cutoff point where my winning trades drew down to, but still survived ultimately. And then I add a few ticks onto that, and that would be my scale in point. So I would scale in to obtain a better average entry based on the MAE number. And then if it still works out, I'm in with a little bit more size and, it's all great. Now, once it starts to go into my position, into my profit, then for the most part, I have a clearly defined target that most of the time will actually get reached. So today on gold, I would say that the first sort of target for this sort of trade will be the Asia low. So that's, but it's not the Globex low. It's the one where I basically use all 3 Asia exchanges. So it's the one from Shanghai Open, and that's around 27.88.2. So that will be my target for this particular trade. So 27.88.2. There we go. And usually if I averaged in, then this would mean my stop loss would be closer to about 30 to 35 ticks. Sometimes I'm able to get that down to about 25, 28, but I really don't like going less than that, primarily because it's lowering stop losses to like immediately is just fraught with difficulty. The lower the stop loss, the smaller the stop loss, the higher the chance of it not surviving long enough to do what it needs to do. So we have to find that golden middle between sort of a good size stop loss and a positive risk reward intraday. Okay, so that's kind of the thing. Now, if I decide to scale out of this, now remember this is just an example trade. So if I decide to scale out of this, and if I go, let's just buy one here, that counts as an additional trade. So for the purposes of this platform, I've already done 2 or 3 trades, right? So it's just how Topstep is, and they're not the only ones who count this as a multiple trade. There's a ton of platforms that do the same thing. It is not an unusual thing, but you know, if you are managing your trade more actively, it will show up as like, you know, 10s or 15, 10, 15, 20 trades. But in reality, all it is just scale ins, scale outs, and then an actively managed position. Now, I'm not saying that you should be actively managing your position if you have no idea what you're doing. And if you're still struggling even with the basic idea of finding a good trade and it going to a trade location as sort of like a singular idea without messing around with it too much. And Hogue has a saying for that. He's like, you don't want to Lenny the trade. And if you know what he's talking about a book called Of Mice and Men, where the guy kind of plays around. I think it's is it a lamb or something? It's an animal of some sort. And he kind of plays around with it, chokes it, and then kills the animal, right? So we don't want to be doing that with our trades. However, depending on what's going on, because of the scale-ins that I do sort of at the start of the trade, that will show up as multiple trades. So I just wanted to clear that up because you have a lot of keyboard warriors on X platform that are very quick to bash other people. I just wanted to clear the air. And I did have a bit of a migraine yesterday, so my fuse was a little bit shorter than normal for nonsense. All right, so I'm going to close this out now and go back to my main XFA. And I see some people are asking about copper. Thomas Hayes says, how do you calculate quickly which markets are moving in terms of price and volume? I don't look at volume. I look at how far are we from VWAP and whether Asia has actually glued itself away from VWAP or not. I try to do as less calculations as possible involving a calculator when I'm trading because I think it detracts from the pattern-based behaviors and visual recognition of other things like, do we have a strong auction? You know, are the TPOs being left behind, single prints? Do we, you know, have any other levels in the way to the target? Did I miss anything? And then if you try and kind of go and calculate things, like this is why I have a software development company to automate the parts that do require some calculating and stuff. Back in the day, I used to be a spreadsheet queen. So I used to get ready sort of the previous evening before the markets would open. And I would plot all of my levels on the chart, kind of similar to what I'm doing here. But, you know, some of these do not really require me to do any calculating because we have like, you know, bots and stuff that can actually drag the data for us. And that's exactly what I use indicators for. I use them to automate my process, not to replace it, okay? So let's have a look at copper. Now, copper has turned around, but it's turned around at a weird area. So I'm just gonna, again, put a few lines here so that we can get those orientation points. So I have the value area at 438.90. And that's the value area low. So we're coming at it from underneath. We're not inside value. We're outside of it. So there is an imbalance today. and we're trying to go back to value. Now, London value, it can be a pretty decent reversal area, but if I'm going to run a reversal trade from London value, I would prefer to see some other measure somewhere in there, right? So I would prefer to, let's say, have an average session range high around here, or at the very least some sort of an options level, like a bunch of calls located there. Something that I can really kind of lean into for a short. I'm not seeing that up until 440, which kind of muddies the picture a little bit. But let's say that if we do get there, I'm going to be looking at this entire zone. So not just one singular price level. I never look at a singular price level. It's always a zone of about, well, on copper it'll be 12 to 15 points. So yeah, let's see what happens when we get to that round number. Now, sometimes when you have these levels inside the value area, that can put a wrench in the works for the value acceptance trade, which would mean going up into value, closing a 30-minute candle inside it. That constitutes the value acceptance setup. But if you have something else that's in the way, I'm always a little bit suspicious about that. So let's just have a look at the larger time frames to see exactly where we are. So this is a weekly chart. We're still sort of in the middle of the middle, but we have a lot of wicks here. So weekly chart not really giving me much detail, pretty evenly distributed at this point. Now on the daily chart, we have accumulation here. So longs would speak to me more around these levels, at least until we get to the top of the range at 445.80. So yeah, shorts here. If we were up at 43.10, I would be like, yeah, shorts. But anytime something starts to accumulate for more than a day or so, it's very, very dangerous because it brings a potential to just go into that sort of markup phase, and then you just get run over. So I would hypothesize that longs to me would speak better, at least for this time of day when we haven't really had that much movement. I mean, Asia did try to bring it up, but ultimately it's all looking pretty flat. This is now a 4-hour chart. And on the 4-hour chart, we're kind of sitting in the middle of the middle, point of control. The bands are pretty flat. 30-minute chart, we have some movement. Again, we have perceived that. Then a little bit of a sell-off pre-market. So this was Eurex. So they obviously took it the other way. Again, doing that sort of chase between the sessions. So we have Asia going up, Eurex kind of bringing it back down, and then London reversing it again. So even that would speak to a more long side of things happening. I see another question. Mikey says, do you use 30-minute time frame to enter trades? Please let us know what time frames you use and why. I don't use 30 minutes to enter trades. Well, sometimes, but most times I will use a 100-tick chart or a Renko. I know we don't have Renko here, but that is another way. So you need some sort of an other orientation thing on with Renko and with tick charts. I use the 90 EMAs. Now on this chart, I have a little ribbon where the 3 90 EMAs never match up. That gives me a better idea of the strength of movement. I also have this ADX indicator. Now this is not going to be useful on anything less than a very, very small time frames. Because we're intraday traders, you're looking for a pump or a sell-off in order to get most out of your trade, right? So that first push should really be some sort of a momentum rollover to either side. And if you don't get that, then all you're doing is just watching paint dry, which can happen on copper and platinum. I mean, some of my platinum trades last for 3 hours, and you have to be very patient. So if you're looking for, NQ type action, it's like, yeah, let's go. It's wagging around 50 handles, left, right, and center, smacking everybody on the face as it does that. So it's one of those things where your personality should match whatever you're trading. Now, I'm a pretty chill person at this point at my age, getting to that mid-40 point. And before I used to be crazier, when I was in my 20s, I was very hard-headed, and I probably still am pretty hard-headed, but I've settled down a lot. I'm pretty chill, again, for the most part, but I am a Mediterranean woman, so if you push the right buttons, I will clap back. Let's put it that way. But yeah, so the whole thing about the entries is that I started off as a swing trader. So I only used 4-hour charts, supply and demand, limit orders. That was my thing for 5 years. Then in 2012, I started moving into intraday, but it wasn't until really 2013 that I went to a prop firm to learn how to do all of this stuff, or some of this, because most of it is my ideas that I blended from the swing trading with volume profile and market profile. But one thing that they taught me was that there's like a what do we say now? There's the 1,000 ways to peel an onion, so I want to keep cats out of it. So I started off on larger time frames. I moved into reading of the TPO profiles. But remember that TPO profiles is just a lens into the market. It's not necessarily a trade signal, because a lot of the stuff that happens in the profile, it's actually pretty real time, right? When you're breaking outside of the initial balance, out of that first hour of trading, that's not, let's wait and see what happens. Like, you are getting a breakout out of the IB. That's a real-time event. Now, it's up to you to figure out contextually whether a breakout trade makes sense around those levels or not. And if you can't figure that out, well, go and do some backtesting, learn how things behave, and then come back armed with that knowledge and data. And, that's what we're here for, right? But if you have something like value acceptance, even then you can also go, well, we are inside value. There's no, let's say that this comes up to the value area and then start spending time there. When I say start spending time, it didn't just touch into value and reverse. It sort of went up there and now it's like hanging out. It found a crowd who might be interested in what they have to say, right? It's like, yeah, man, how are you doing? How are you doing? Yeah, so it starts to spend time there. It starts to build more volume. Ergo, accepting value. That's all real time. You don't need to wait for a full 30 minutes to notice that price is spending time inside value. Same thing with a failed auction. If we go above the initial balance and then we don't manage to sustain the auction, well, that's kind of like going into a room where you didn't like the vibe and you're like, oh, God, okay, let me go back where I came from because these guys were nicer, less drunk maybe, and then they can't find business, so you go back inside value and start seeing the weakness around the edges. So you start to see the price going back into value and spending time there. It's not getting back out of it. So all of that is literally providing you with that elusive gut feel that must be based on experience. Otherwise, it's just an impulse. Complete nonsense, right? So whenever you're looking at these events on the TPO profile, it's down to the time that we're doing something. Are we popping outside of IB and then spending time outside of it? Or are we showing weakness and then going back into it and spending time inside IB? So keep in mind those concepts as I'm kind of reading what's going on in the market. So it's not that I'm using a 30-minute chart, do or die, and that's it. Now, when it comes to the actual entries, I do use very low time frames. I don't recommend that, okay? I do not recommend that you replicate what I'm doing after 17 years, or what Rips is doing after 10 years, or what Dakota is doing after 15, right? We are there with like a whole bunch of years of staring at this stuff day in, day out, pretty much obsessed with the markets and wanted to make this work. So therefore, we did everything in our power to develop the skills in order to be able to do it, right? And anyone who's been trading for several years, it's the same thing. We will have more experience watching the markets and what they're doing. So let's say that I want to enter a long. Again, I'm going to use a micro for that because I don't have a good level here just yet. So this is all just hypothesizing. And I'm going to use the same one that I used before. So let's say copper micro. Now I'm going to fall down to the 100 tick chart. So let's say my idea is that we accept value and we go at least to this 440 level where we have one of the high volume levels that could cause a gamma flip intraday. So how would I answer this? Well, right now there's nothing for me to do, right? The trend is already on the way. So ideally I would need a pullback at least to this VWAP. And then I want to see another push away from it. Now, in the most ideal situation, if you look at how this market's moving, there is an established low here. I'm just going to change the color of this. Well, let's do white so that everyone can see that. So there's a low there. There's another low here. Now, what would I need to see? Well, let's assume that they're going to wag a little bit inside this range before they really pop up. Right now, we are finishing the initial balance, like literally this minute. So I can see F. Thomas says, hey, Dee, did I be set 56 minutes ago? No, so we are in that weird... The reason why London session is going early is because the UK has changed the clocks and USA has not. So they're changing this Sunday, and therefore for this week we are out of sync with the USA. So next week we're going to be doing the normal 90 minutes into the session. But I do hear they're going to have another segment just for the London Open. I'm not going to be running that. So it's very likely that this segment is going to be renamed to Markets Talking with Dee or something like that. But yeah, I want to keep to my time where I know that I get the most setups and I have a lot of data to fall back on. And then we can find some quality trades on the stream or towards the end of the stream, especially when we get DAX. Because DAX, I don't trade it like every day because the setups won't be there every day. But I do have a pretty high accuracy on DAX, and it just moves like a dream. I love that product. So we keep pushing, and that reminds me to go and grab my Eurex form. So that you guys can upvote this. And to keep upvoting it, I'm going to put it in the chat. So that is the straight to funded, which are the people who are helping us build Topstep. That's the direct link to the Eurex post. So please, please, please upvote it. Antha says, what is your stop loss for platinum? To start with 35 ticks, and I typically aim for anywhere from 50 to 70 ticks for a profit target. All right, where was I going with this? Oh yeah, so the entry that I like to do is to establish a range of some sort on a very low time frame, and then to look for a breakaway out of that. So basically on a 100-tick chart, it would mean that if we start to kind of consolidate, distribute, I want to see the market at some point giving me a decisive move somewhere from these areas. So not just, oh yeah, we kind of went up a little bit, so a little bit. This is a gradual movement. And if you look at it on a 15-minute chart, for example, it's going to look like it's a very non-committal movement. This is a pattern called the 3 inside up, where you effectively try to go lower, but some buyers step in and they're not sure. I mean, technically it's a 3-bar reversal, but I have probably 3 different names for 3-bar reversals. We have morning and evening stars. We have 3 inside up, 3 inside down. And then we have the sort of a harami pattern, which is a 2-bar, where you have the second candle comprised inside the previous candle body, and then you get a reversal. So, you know, all of those are 3-bar patterns, but at the same time, I have a distinction of how I use probabilities for each of those. I actually prefer bullish engulfing, like straight up, right? 2-bar reversal with a very strong second candle that doesn't have many selling or buying wicks to it, because that means more conviction in the move, right? Now with those sorts of movements, what tends to happen is that if it's too strong of a movement, then you're going to have a problem of having a too large a candle like we've had here. So some sort of a reversal down to some sort of an area of reference is not a bad idea. So now we're back at VWAP. Now last time when we got down to VWAP, we created a new low, higher low. So it wasn't a low low, it was a higher low. So let's see if the same thing happens here. But at the same time, I'm going to be scanning for a strong movement so that I can maybe, just maybe, obtain an entry here. I'm going to go up to 3 micros. Woo. So what am I looking for here? I'm looking for a bounce from VWAP and a decisive move above these 3 ribbon-like 9 EMAs. So that will show me that something, somewhere, someone is buying, right? So they are changing sentiment. Right now, there's nothing to see. It's just a regular test of VWAP that doesn't have much power inside it just yet. I see we have some trolls in the thing, so thank you, Bruno, for dealing with that very quickly. Yeah, someone comparing Topstep with ridiculous firms that have been around for 3.5 seconds and are already disappearing. So for that person who posted that, do your research on Topstep and you will see that Topstep was the first. We were the pioneers. Mike Patak was a pioneer of creating this industry. So Topstep has been around for 13 years. Do not compare us to other players in the space that are highly suspect. Okay? All right, so let's have a look at some of the other questions. Did I miss any? Let me just see. Please let us know what time frames you use and why. Okay, so I did explain that. Morning D, could you please explain how to use the DOM in your trading? Okay, so for me, the DOM is very simple, right? And I actually use Bookmap over DOM because I feel that I don't need to lose my eyes staring at all of this. Now, micro gold probably not the best choice here. Let's go to something that has a lot of levels. Okay, so when you are looking at an ES DOM, it's a thick market, right? So when you scan through the size of the orders, so all of these, I did do some videos on my own channel like a year or two ago explaining what it means to use the DOM, time and sales, order flow, market profile, auction process, and how all of that is order flow. But you have real-time order flow, and then you have the auction process order flow that's sort of lagging. Whereas this is a more real-time view into where the liquidity is. Okay, where is the interest from the market participants here? How do we find that? Very simple. Size of the orders, right? So as you can see right now, they're all pretty evenly distributed. Nothing is sticking out. However, as we get up to 58.91, there's somebody sitting there with 130 contracts, whether it's a one person or, 3 or 5 people or 130 people with one lot. We don't know, but somebody's interested in this 58.91 price. And if we keep going, you can see the same thing around 5,900, 136 contracts, and so on and so forth. Now, the further out you go, the thinner the dome becomes, and then you see 59.25, 203 contracts. Okay, so that's all liquidity, right? Usually, if you have liquidity somewhere close by, what's going to happen is that the price will chase that liquidity. Now, when we say chase that liquidity, it sounds like, oh yeah, we're going to go and take out everybody's stops. That's not what they're doing, okay? They don't care about your stops, especially not on a sim account. But what they do care about is power behind their movement. How do we get power? With volume. What do we need for that? Liquidity. How do we get liquidity? We hunt where there's the most contracts located. And then you grab, liquidity grab, right? You grab a whole bunch of power and momentum by smacking orders in the opposite direction. That basically gives you a springboard. That's the whole thing behind liquidity grabs, right? And that's what we look for on the dome. So if you see very large amount of orders at a particular price, that's what they're doing, right? So they will chase liquidity. If you see 136 at 5,900, there's a pretty decent chance we're going to get to 5,900. So you can then maybe formulate that into your hypos to go, well, do I have a level here that might actually bring me back to 5,900s? Is there a level? Is there VWAP? Is there value area edge that could act as a springboard? And then what do we have to the downside? Well, is there anything to the downside? Nothing obvious. There's 58.40, 180 contracts. And then again, nothing until 5,800s. So immediately you're getting pegged numbers. You have 5,800. You have 58.40. Another potential reversal point. And then to the upside, we have 5,900 and 59.25. Yeah? So those are your orientation points. If you can then match those, sort of doing a reverse analysis, if you can match those to levels that you already have, then you've got something. Then that is more of a systematic view of using the available information we have on the dome. So hopefully that helps you. Still no buyers on this copper now, so look at that. And we're nowhere near levels where you can short this. VWAP seems to be a wagging point at the moment, and that can be an indication of a range-bound day, which wouldn't surprise me, guys. So, okay, I'm going to give you a heads up. Going into NFP on Friday, and then elections Tuesday, FOMC Wednesday, we have so much stuff on our plate. I am probably going to get a combine for that. I want to remove risk completely. And if you're a live trader with Topstep, you probably got that email already where they're going to be locking up our live accounts for the overnight Monday to Tuesday. So we're not even going to be able to trade the live accounts. Now, that's only live. That doesn't apply to XFAs. However, I would highly suggest that if you have not traded elections or if you've not lived through the elections, to just let it go. Go on a practice account or go on to a combine, whichever one of those removes risk for you, because we're all at different stages of our journey. So let's say that a combine means a lot to you. You still haven't been funded. Maybe you've been funded, but you haven't taken any payouts. You blew out very quickly. So to you, a combine is probably still something that you've invested your time and effort into, and therefore you shouldn't be derailing it during elections, because it's going to get crazy. Even on a sim, you can get unfavorable slippage, even though it's not coming directly from the exchange. But there are orders that are being matched up, in the whole system. So I would go onto a practice account in that case. Now, if you are in an XFA, then I would go into a combine. If you're already a live trader, then maybe you can consider getting one XFA that you designate and you don't mind losing. But, make sure you have a few. Now, I don't copy trade mine, as you've seen. I've got 3, but they all have different things to them. Different, profit buffers. This is my main one, so coffee it's called. The point being is that I will not be using coffee XFA to trade anything in the elections, and in fact I'm probably not even going to use Hulk or Mirage to trade it either. So therefore I'm going to get a combine, and then if I see something, we're going to have Coach Jay on Monday with us. Then maybe we can hypothesize and put on a trade to run the setup, but not to derail any of the accounts where it matters. Okay, so be very, very careful going into these sorts of times. It's going to be very, very tricky. Lots of volatility, but probably lower liquidity until all the results are counted, until the votes come out and all of that. Just be very, very careful. Cayman 2023 says, hi, all, beginner here. What is the difference between a tick chart and a time chart? Well, a tick chart doesn't have time. Okay, so this is all tick based. If you traded non-futures, something that isn't centralized, then tick charts are a little bit suspect, because they usually come from a broker and it's a derivative of a derivative of a derivative. So I'm not in favor of that. Renko, same thing. They use tick charts, not time. Range bars, also tick charts, not time. And for this purpose, even though I do like time-based charts, this is just a tool to get me a little bit more accurate with my entry, so that I'm not kind of looking at this bullish engulf. Like, imagine if I only use 30-minute charts and I had this idea for a long. Well, I would see a 30-minute bullish engulfing, I would enter, I would get smacked on the face. So that wouldn't have been a very good execution, especially not for London. And now I have a more granular view in what's happened in that candle. Now, if you're a beginner trader, I really do not advise this, because it's too quick, too much information, and you need to take it slow, and you need to add one skill at a time over several months and even a few years. You cannot look at some of us who have been doing this for a very, very long time. I've been trading overall for 17 years, and futures I've been doing 12 years. Every day. This has been my job since 2013, okay? Get up, go to the office, stare at the charts, come back, analyze, do it all over again. 12 years of that, right? So naturally, whoever has had that kind of experience, it's not going to be the same as somebody who's just starting out. They've only been looking at the charts for maybe 6 months, and they're having some success, but they try to implement all the stuff that you see that we're doing, like Hogue, 40 years of experience, all the stuff that he looks at. Even I get confused, It's like open interest, and I'm like, I sort of get it. But I'm a total baby compared to Hogue's experience, right? He has the experience of the pit, knowing exactly how things work. He can tell you how much NQ is going to move by the amount of contracts that you put into the market. He can calculate that. I can't really calculate that. I mean, maybe I could if I really sat to study it, but he just knows it, So he's been trading for 40 years. I've been trading for 17, and it's just different things. If I tried to incorporate all the stuff that Hogue looks at, I would get an information overload. That's why it's nice for me to go to Hogue whenever I'm seeing something with delta or open interest and go, hey, what do you reckon is going on here? I'm not scared to ask questions, and I don't know everything. I know a lot, but I don't know everything. And if I don't know something, I will go to the people that know more than I do. For example, Dakota trades Nikkei. I've only been trading Nikkei, a few times this year, more often, because I found that it actually moves similarly to DAX, especially for Asia. However, I have to sleep, so that's not really the most ideal thing for me, because it is dead in the middle of the night. Like 1 a.m. I would never sleep, and I need my sleep. But it's certainly an interesting product. So when I started trading it, I was like, let me reach out to Coach Dakota and see whether I can ask him some questions. He was very kind to answer. And we had a little chat about it. And then he even said, hey, why don't I come onto the London show at some point to actually talk about it? So we'll see if we can drag him over someday. So I go to the source, right? I go to people who are trading the product that I'm interested in, or go to people who are using the concepts that I want to know more about to a very deep understanding, right? Hogue has a deep understanding about delta and about open interest. So naturally, I'm going to ask him. I'm going to be like, hey, Hogue, help me out, man. And he's always happy to oblige. He's very nice. He is very open to helping everyone. He is so generous, very kind-hearted. And use all of us for our knowledge to find out more, but beware of information overload. Just don't add everything all at once, right? Okay, pros and cons for ticks versus minutes. Well, again, it's a personal preference thing. If you are looking for momentum over time, so you just want maybe a scalp and that's it, maybe tick charts would be probably better for you. But, sometimes I'm looking for platinum trades that will last me longer. And in that case, I may get involved during a 100-tick chart reversal. However, I will then move back to the 15-minute chart and I will go and do something else for a while. And then come back every so often, popping in to see what's going on. I'm not going to sit here and go, like so zoomed in and just stressed out. So I will not babysit certain trades. And for that, we need time, right? Because if I took a setup based on a 15-30-minute reversal, but I entered it through a 100-tick chart to get a better entry, there's nothing else for me to do. I have an average duration for the trade that was based on a setup from a 30-minute chart, ballpark sort of 90 minutes to 2 hours, right? Why? Because that's the amount of time that you usually see a significant movement in that time frame. But if I'm entering on a 5-minute chart, I'm going to be out of that trade usually in about 15-20 minutes. So same thing, you're looking for 3, 4, 5 periods of the time frame that you entered for your kind of maximum duration trade. I have a whole set of rules around this, so I'm not going to go into that because I'm just going to confuse people. But I like my time stops, so let's just put it that way. If something doesn't reach, so I have either price target or the time-based target, right? So if we are still in profit, but, it's been going for a while and it's in, let's say 40 ticks or something, I will take those 40 ticks if 90 minutes have elapsed from the start of my trade, because that's more than enough time for it to do what it should be doing, and then I cut it. If it moves after that, so be it. It's just how it is. We have to accept it and move on. What is your daily routine to approach the market? Well, you're looking at it here, right? So I have my lovely Blotec indicators that are helping me automate all of this. We want to stay on Topstep X, but again, we don't have TPO, so it's very difficult to talk about setups. So on Platinum right now, we're seeing some consolidation just above the ADR low line, which is at 1043.7. So if I manage to get an extension of the initial balance, this will open up a possibility for a move at least to VWAP. And maybe even all the way to the London value low at 1057.3. If I look at the options activity, so that's the next part, so I look at that, and I know it looks very quick because I can do it on the fly, but it actually took many years for me to get to this point where it's so seamless that I just look at it and I create a trading plan. And when I'm in any sort of a drawdown or anything like that, I go back to my usual thing, like, for example, Hyper 1. What am I looking on? Copper. So I'm looking for value reversal is Hyper 1. I will then be looking for potential VAA partial, value acceptance partial, up to whatever that level was, 440. Why? Because at 440 we actually have some options levels and interest located there. And if we actually go over it with quite some force, that can actually lead to a further upside, and it can actually lead to a full value acceptance. Now the third choice would be if we go into sustained auction short and then we move towards the average London session low, which is around 433.10. And then finally, if we get stuck in a neutral day type, because we have so many things going, well, this value reversal could change into a neutral day short, neutral fade short. And then also, once we arrive, if we go into a sustained auction short first, we can then arrive to that ADR low and run a neutral day long. So I go back to really externalizing my hypos, right? Exactly what do I want to see? And, you know, again, this could look very simplistic to you, but again, within these setups, I know what I want to see. And if I don't see it and I'm in a trade, I will cut it early. If I do see it, obviously I'm going to stay in and try not to mess with the trade too much until it's in some profit. Typically, I start to mess around with it when we are 40 ticks, we're not really doing anything, and I start to get a little bit twitchy because it's been, 70 minutes, it's been over an hour, and then I start scaling out, right? I'm like, let me just clip some here, just in case. And then if it goes to my target, it's fine. I took a decent chunk out of it. But I don't move my stops. I believe in my setups. I have huge level of confidence in my own setups, primarily because the levels that I use, they are not lagging indicators for the most part. They are distribution curves. They are algorithmic ranges. They are, options, call, and put levels and things like that actually have a huge effect on the market, just purely from a mechanistic point of view. So yeah, but usually I won't do this like every single day. However, every single day I will look at all of my orientation points. At this point, they're all the same. So it's always the same orientation points. I don't change one day. Oh, today I'm going to use a moving average on a 21 EMA. But tomorrow I'm going to try and use anchored VWAP because, just because. And then the next day, I'm only going to try and use the dome to find my setups. No, I don't like that either. Maybe I should try, another, chicken bones crystal ball thing and use the stars and the astronomy to find my setups. So I don't do that, right? All of my levels, day in, day out, they're the same levels, right? It's the same thing. It's distribution curves, algorithmic ranges, options levels. So, that simplifies things a lot. But it takes time, right? It takes a long time to get there. All right, let's have a look at more questions. How do you set up your volume on the right side of the chart versus the bottom? This is the volume profile visible range indicator. So it's an indicator, right? So you go indicators, and then you have this called volume profile visible range. Just plop that on the chart. It's going to show up. But word of caution, it is the visible range profile. So whatever you have visible on the chart, it's going to change. So for example, if I scale out, this is now changing, right? So now we're looking at a massive amount of volume. And then if I want to just look at this, it sort of zooms in. It's kind of a good thing and a bad thing. I prefer to look at it not from a visible range point of view, but from a previously defined time frame. So, you know, maybe 4 weeks or 1 day or just a session range. So this is why I have a separate charting platform. For me, Topstep is more of an execution platform. And just FYI, I've always done that. I've always said one platform or one instance of the platform for execution and some kind of basic charting, and then my big sort of Ferrari over charting package on the other one, where even if I click a few buttons, I know it's not going to drag me into an unintended trade that can happen. Like trader rate is particularly bad with that. I would try to explain something and then you click somewhere and it just puts a limit order and you're like so if you don't notice that, it can get you into a lot of trouble. So I've always maintained a separate charting platform to the execution platform. Okay. The thoughts of gold right now bounce off of VWAP. No. So I see a reversal from the call resistance. That's a dangerous game to play because we have a lot of room to the downside and we have a lot of stuff that's been left behind as a structure that needs to be repaired, right? So yes, we're at all-time highs. Yes, shorting it is riskier. But to me, longs around here would actually be more risky, just purely because of the interest where we see the call levels located, right? So be very careful with gold at these levels. We are going into a lot, like so much information with the economy, uncertainty over elections, Middle East stuff. One good news can send gold falling off a cliff, okay? And at these levels, I mean, look at how we are behaving. Let's have a look at the structure of the price. We have a drop, base, drop. Is that a good thing for a long when you have a supply, like literally a few ticks higher? No. You don't want to see opposing zones like this. We call this an unclean arrival in supply and demand. Why? Because you have a ceiling right here. So it's basically like trying to jump up in one of those Jeffries tubes, if you ever watch Star Trek. On the ship, they have like really narrow sort of ventilation tubes and stuff. They call them the Jeffries tubes. And they have to crawl, right? So imagine you're in a Jeffries tube here. That's your VWAP. And then you're trying to jump up. What's going to happen? You're going to hit the ceiling. Okay? So that's the problem when you have an opposing area so close together. What I want to see is, let's go back to platinum, 30-minute chart. Looking at the platinum, I have nothing in the way until we get up to 10.57.8, but I know that VWAP can be pretty reactive in platinum. So to me, this looks better. Why? Because we are having a consolidation. So it's a different thing. We don't have a ceiling. We're consolidating. And if this starts breaking out above 10.49, we have a clean slate up to VWAP. This is a much better setup, right? Much better setup. So that's what I'm going to be looking at. We still don't have a signal for entry, though. You know, it's still all pretty slow. And if I do get a signal for entry, this would probably be my trade. So long platinum up to VWAP. But gold, no. To me, this doesn't look right. Copper looked okay. Copper is looking less okay now. We just extended the initial balance range down. And now we are in a potentially hypo number 3, I believe it was. Let's go back. No, not the interval. God. I need to stop using the escape button for this purpose. Yeah, so it's going to be... Where did my hypos go? Yeah, it was a hypo 3, sustained auction short, down to average daily range low. And that was at 33.10, I believe. So that's the hypo that is appearing right now on copper. But again, because I don't have a good level here, I'm not going to run a breakout trade at this time of day, at this time of the year, when we have NFP. You know, do I really see a good potential for copper just going into a sustained auction? Probably not. I would have preferred that happened from the value low rather than middle of nowhere. So that's my 2 cents there. All right. Hi, Dee. Can you explain the setup to a 5-year-old? Well, hopefully I just did with the whole Jeffrey's tube analogy. What do you mean with val reversal? Is it that the price opens below previous day value and that the price will go? No. So the price opens outside of value. So we're opening below it, right? And value reversal means you go up to the value as if you're going up to any other resistance level. So instead of value low being support, it is resistance, right? So it's exactly the opposite. I see some people who are like, oh, we're below value, so we just need to run it all the way through it. Yes, sometimes, but most of the time what will happen is that the distribution curve is a supply, right? Effectively, it's a supply when you're coming at it from below. And it's a demand when you're coming at it, you know, falling towards it. It can be supportive and it can be resistant if you're outside of value. So anytime you open outside of value, below value, that's a bearish signal until you accept value. Then things change. The market state changes intraday. This is where the skills of the trader come in. But generally, it's one of those things. If you're coming at the value from below, you get to the value. Most times value edge, the outer value edge, will be the reversal point. So keep that in mind. They're very, very high probability trades, especially if you can match them at the right time of day when you've had an extended move up to the value area and then you sort of start to lose volume. That can be actually pretty good. This is why the euro close reversal is so powerful when you match it up with the outer value edge too. So anyways, I'm going to finish it up here, but I have some plugs here for you guys. Yes, I have some plugs. Let's have a look. Today we're gonna have Roast My Trades by Jack and Ben on the main broadcast. No, not today. That's tomorrow. Hold on. What day is it today? Yeah, it's Wednesday. That's what I thought. Yeah, so tomorrow, just reading the show notes here. Tomorrow, we're going to have Roast My Trades by Jack and Ben. So that's Thursday, 31st of October at 12 p.m. Central. So instead of the shoulder tap, we're going to have Roast My Trades. It's always super fun. Jack is a savage when it comes to this. So very, very fun. If you want Jack and Ben to roast your trades, sign up in the link that I'm about to post now. There you go. So yeah, it's a pretty fun thing. So if you want to be roasted by Jack, definitely check that out. What else do we have? We have the TopstepTV on Instagram. Did you know they post behind the scenes? They post whole bunch of stuff on their Instagram channel, so check it out. Very, very fun page to follow. Now, remember that we have other Topstep programming as well. So I am here for the London session, obviously, and we're going to have somebody else joining for the London Open. So I'm not going to be running that. It's going to be another person. But we also have at the buzzer, right? So we have Coach Jay and Coach Paul. nearly every day, I think. No, it is every day, so Monday to Friday. And Nick for a Tick is going to be a special guest on At the Buzzer for 31st of October. So that's all tomorrow. And then obviously we're going to have Coach Ray joining us here tomorrow. Fingers crossed. I'm going to see if I can dress up for Halloween. It should be pretty fun. But yeah, we're going to have Coach Ray here joining us and discussing the markets and seeing whether we can find some setups. However, it's going to be one day before NFP, so we're going to stay safe and we're probably going to be on combines. So don't fret too much if that's the case, because we're trying to save money, right? We're trying to make sure that we are removing the risk during very, very volatile times when things are very uncertain and you can basically just get smacked in the face if you're not careful. You don't want that. Risk control over everything. This cannot be emphasized any more than for the end of this week and the beginning of the next week. All right, guys, that's it for now. I'm going to stalk the platinum trade. I think we're getting some movement, but nothing just yet. Some movement. Here's a 100-tick chart. As you can see, it's a bit non-committal. So for now, it's all just a consolidating range. We really need a breakout and a committed move along with these DMIs to show me that the movement is growing. Right now, nothing's growing. So we sit and wait, right? We stalk the markets like good old chameleons. My buddy over there in the corner. Anyways, click the like on this video. It only takes you a second and it's completely free, guys, like the rest of the stuff that we do here educationally. It really helps me to keep growing this segment and to keep bringing you the knowledge that I've come by with great difficulty over the last 17 years. So hopefully I can continue to do this for, another year at least, or maybe even longer. So we'll see what happens. But until tomorrow, I'm going to sign off and enjoy the rest of your broadcast. We have all of our lovely team coming back on slightly later on today. So I will see you tomorrow with Coach Ray. Until then, I'm Deeyana Angelo, and this has been TopstepTV. Take care.